you for coming. So my name is Matt Arruda. I work for Capri CMW Insurance. So we were last year selected as kind of the preferred broker for the BC Craft Brewers Guild. So since then, we've obviously been out trying to market ourselves. For most of you, if you take a look over to your right, you got a couple people sitting in the middle of the room. They're with Northbridge Insurance, so they're kind of the main carrier that have stepped forward to help support financially and also with a product for all of the members as well. So before I start, are the majority of the people in the room newer breweries? Yes, at startup phase or not, just out of it? Okay. So I'll fine tune a little bit on the fly to more stuff that probably would apply to you guys as you're kind of starting out in the venture. So a little bit of background on myself. I've been with Capri CMW for about 7 years. I was in banking before, so I kind of have a bit of a two-sided prong approach in how I see things. I'm based in Kelowna. We have an office, number of offices through the Okanagan. I'm based in Kelowna. We also have an office here in Burnaby as well. Now, this is our nice corporate spiel, but so we're an employee-owned brokerage, which is rare these days. So everybody you deal with is in one way or another likely an owner in the company. So kind of jumping into things to start with. So we work in a few different layers. Obviously, these next kind of couple slides will be the real basics of what you're going to look at. Considering things along the lines of if you're owning your own building, which most of you probably aren't, but when you're selecting a space, certainly the age and kind of quality of it will come into play when we're talking about it from an insurance perspective. So if you're jumping into a 120-year-old, heritage space, and there's going to be a whole bunch of extra work to work through on that will certainly come into play when we talk about, what upgrades you're going to do to electrical, plumbing, roof, all that type of stuff if the landlord's not doing it on your behalf. Equipment, so these are pretty straightforward items, but when you're looking at the equipment, remember that you need to deal with not just the invoice you got for you to buy it, but also all the installation costs. So sometimes when we meet with clients, they do a lot of the work on their own. But when it comes time to, if you had a loss and you actually needed to go and replace that, if you're not able to go through and put that sweat equity in again, think about building that into the value of your total equipment when we set into your policy. Tenants improvements. So, this one's going to be a big important one for a lot of what you do. So this is stuff you're going to put into your space that's not going to leave with you in the event that you go somewhere else. With that tenant improvements, we need to deal with that early on. So a lot of people don't think about it when they're actually doing the work to get the brewery up and running. I usually get phone calls once they're, a few weeks away from cracking the doors open, and they've been doing a whole pile of work leading into that date. So, if you have a broker, hopefully myself, start early. Reach out in the early phases. We can give you budget numbers early on the insurance too, which will, I'm sure, help you along the way. Also, a lot of times if you're not doing the work yourself, asking questions of the contractor and what kind of insurance that they have. So if they're doing work in there and they cause an issue within the space that affects the building or even tenants that are on either side of you, we want them to kind of burden that issue, not you as this person who leased the space because they caused the issue. Okay. Stock. So this is obviously when you get to the point where you're finally up and running. So typically, most people, you will only get, your cost that you put into the material to get it to that point of service. With ours and our program, how we've done it is we've done it a little bit differently in that we've looked at it and basically given you the full sale value. So any products that are basically day one into production, right till it's into keg, bottle, can, we'll give you the sale value. So you need to we'll do a little bit of math and work with you on that, but it's a good kind of upsell for, how we deal with our program, and that if you lose it on, day, 99 of 100, you want to make sure that you're getting it as if you served it out of and sold it to a patron, right, and get full value out of it. So we've had pretty good response on that, and I think it's a really nice, nice feature for you guys. This is the last one on the property side that I see a lot of issues with is co-insurance. So basically what that is the insurance company's way to protect themselves from you underinsuring. So I get a lot of people who say, I'm going to insure this to 50% of the value because I know I could find it used or I could get a good deal on it out in the marketplace. Sadly, that's not how insurance works. So they want you to value it at the actual brand new value. So if you had to go out and buy it today in the open marketplace, what that value would be, and they call that replacement cost. So if you're out on that number by a big chunk, the insurance company may penalize you in the event of a claim, and you won't get the full value out of it, out of the policy that you thought you were going to get. So good conversation to have. I talk about it a lot, but it's something to think about when you're trying to maybe save a few pennies here and there. When you're valuing out your stuff, that's probably not the time to do it. So next one, business interruption. With you guys, and I'm sure as you go through the process when you're dealing with your licensing through the LDB and you're going through a municipality to get your permitting done, your architectural work done, it's a long, burdening process. So if you were to have a claim, you need to factor that into your mind if you literally needed to start from scratch in your space, to leave yourself enough time to go through a permitting stage, get all the construction done, and then back up and running to the same revenue level you're at before the claim happened. So we see a lot of people who only buy 12 months of this, and in my experience, it's just not enough. I mean, we see people who take up to 6 months just to get through the permitting, architectural side, and basically put the first nail in the wall. And then at that point, you still got all that time. You've got to build back out the revenue you had before. So most of my clients, we start at 18 months worth of coverage. And then we have a few that actually go longer than that, go into the 24-month mark to give themselves enough time to kind of build back up. Okay? Any questions? I'm a bit of a rambler, so if anybody wants to ask anything, certainly stop me at any point. Good? Equipment breakdown. This is something actually when I run across a lot of more established breweries and we get into it with them, I've seen a lot of breweries actually don't have this coverage, period. So where this comes into is things like if you had a power surge or a brownout that affected your brewery and it fried out any or all of the electrical within your space, that is what's going to pay to repair or replace those items. Things like, overpressurizing of tanks with CO2, those types of items. If you had, any damage to the tanks in that case, that coverage is what's going to step in for you and help you out in repairing or replacing those items. Okay? So the big one, so we get a lot of questions on, is the general liability side. So early days, you'll have that question from the LDB when you go through your application process, and they'll want that right out of the gate, even if you're only 6 to 9 months away from even starting. So that's an early one, and one you'll have to cross the bridge with probably first more than anything else. And this is going to be that coverage once you get up and running is really going to cover off things like any issues with overservice. So if you overserved somebody and they left and drove when they weren't supposed to and got in an accident, if you were the ones that overserved them, whether knowingly or unknowingly, that's where it's going to step in and help you out. It's also going to cover off things along the lines of your work that you have going on. So when you're doing kind of your build out at the early stages, if something happens in there and it does cause any issues to neighboring tenants, if you're in kind of a strip type area, that coverage will step up to help you. So I get a lot of questions about, because that's typically like a larger premium item when we come to placing the coverage, some questions about how we can kind of curb that cost. So a couple things to kind of think about is where your target market is. So if you're going to be heavier into wholesale versus in-house sales, you're going to see that premium be much less. They treat that as kind of just a lesser exposure than you serving liquor, obviously inside your four walls. Also, if you're if you're making the decision between doing food service and not doing food service, so if you are doing first food service, especially if you have, say, deep fat frying or anything along those lines, we typically see kind of the food service type revenue, get charged out at a higher number. So not deterring you from going that route, but it's certainly considerations to take, once you decide to go one way or another. Also events. So depending on how kind of robust your events are going to be. I mean, if you've got a full Halloween shaker with, full band, the whole 9 yards, you will see insurance companies want a little bit more premium for things like that versus, say, having a one-man guy play acoustic in the corner kind of every evening. So, the more robust the events get, you typically can see some extra premium, I guess, show up at your doorstep. So bear that in mind. Also, I get this a lot. We get questions sometimes about events that they're doing or things that they're doing at the brewery, and I get the response from a brewery owner saying, "How do you know? How did you know I was doing that?" And most of it comes from social media. So underwriters will go to social media. They will Google you. They will look at what you do. And we do have some people who might hold a few things close to their chest along the way, but they will come out eventually and questions will be asked. So it's easier to be upfront about that stuff. Have us all in the know about what's going on, because the last thing you want is a surprise at the end of the day if you're carrying out something that we don't know about and the insurance company kind of puts their arms in the air and is asking questions about why those things were happening. Okay. Of course.
So, I mean, logistically, if we don't really know what events we're going to run through a year, are you suggesting we need to contact our broker every time we give them an
Yeah, I mean, there's... Yeah, so the question is, basically, do you need to report every single event back to your broker? The answer is no. I think if we have a rough idea and a good sample size of what's going through your head about certain types of events, that's fine. I mean, I think it's when, again, it gets super robust in the sense that you bring in a mobile, one of those kicking horses or something like that, and you got the ride at bull type thing going on. I mean, those are big things, and we should know about them. If there's strictly social events where you have a special anniversary event, or a barrel tap or whatever the case may be, in that case, that stuff's pretty normal practice. So we don't see a massive concern from that side of things. I follow all of my clients on social media, so I got a pretty good feeler about what they're doing. And if I see something that poses a bit of a question for me, I'll usually reach out and be a bit proactive on that front. But so far with the clients that we deal with, I don't see anything that happens that's completely out of the norm. But we do get some phone calls from clients sometimes because they recognize that it's a little bit maybe out of the norm for what they do. They may do a big offsite event where they've got a lot more patrons and stuff like that than they would normally handle, and they'll call and ask the question and we'll deal with it accordingly. Most of the time it's not a big issue and doesn't create a big job for you, but it's better to have us in the know. So yeah, we're not expecting you to phone every single time you do an event. That's kind of the short answer.
off-site events like festivals and that wouldn't be relevant to anyways because it's not covered by the festival insurance?
We'll actually get into that a little bit later, but yeah, they'll want to, all those festivals will want to see that you have insurance in place. And if you do, again, if there's the greater mass, there's an issue there, obviously, yes, the festival will deal with it. But if it's something that you do specifically as a brewery negligent at one of those events, it could fall on you potentially. So usually they want to see a certificate or some sort of proof of your coverage. That's usually where you come to your broker and approach us, and we provide you what you need. So we're usually in the loop about what's going on from that side. I know when most of the kind of larger festivals and events are too, so I usually expect those requests to come in around those times. So, okay. So the cyber liability privacy breach, I don't love the name of it because it's really more around kind of the new age wave of theft and business interruption. So where we're kind of seeing a lot of variations of claims are things like essentially having hackers come in and take over your whole computer system. So whether it be holding your system for ransom, so you literally don't have any way to, invoice, track production, basically no access to your computer systems for any period of time, are things that we see a lot more commonly now. Most people look at it and say, "Oh, I'm such a small business. Like, why would anybody pay attention to me?" But sadly, it's these kind of businesses that are the easier ones to prey on because they're usually less sophisticated systems in place. So a lot of these policies are very economical. We can get into, pretty robust coverages in these types of situations for less than around, the $500 range per year. So, the questions where people kind of, or excuses we get when we talk about this are, long usually, but for me, it's going to be something that we're all going to deal with a lot more in the future. So being out ahead of it and certainly trying to mitigate some of it via insurance is not a bad way to look at it. So get into a few kind of brewery specific type items. So these are items that we include in the package that we've put together for the Guild. Not all insurance programs will have this. Actually, the majority won't. And we see this often. So on the top line, I just dealt with one 2 weeks ago, Mandeep? Yeah, 2 weeks ago, where basically they had an infected batch of yeast. So they went ahead, made the whole brew. They figured out something was a bit off, and then they got a call from the LDB saying, "Hey, we've got a whole pile of cans here that are looking like they're literally about ready to burst at their seams. What do you figure is going on?" So my client spoke with their brewer, and he's like, "Yeah, I've been noticing this one batch. It looks like something's completely off," and they backtracked it to the yeast. So the yeast was infected. They had to dump that batch, which I think at this point we think is around like the tune of $30,000. And that wouldn't be a standard thing kind of covered under a boilerplate type policy. But with what we've put together for the Guild, that top line there would have dealt with that, or will deal with that yeast issue in that case. So that's something that's pretty real. I'm not a brewer myself, but it's not the first time I've heard of something like that happening. And if you're dumping a $30,000 batch down the drain, that's probably not a good day for you. So, to have a bit of a backstop from the insurance perspective in those cases, that's certainly a good thing. Processed water. So kind of overheard the last little bit of the conversation, but lack of supply of water. So that's essentially what that is if you have some sort of, basically shut off of water because there's some sort of, E. coli situation or whatever the case may be, and you don't have access to water, the policy will actually step in and bring water to you. So it goes to a certain value. So hopefully it gets you over the hump for that period of time until they figure out what the water issue is and get it rectified. But again, its own kind of specialty type item that, is super cool. And we love to offer it, and it's part of the package that we deliver. Next one, product recall. So I'm sure this is something that's very much at the forefront for all of you, and you think about it as you kind of get up and running. More policies will include some form of this. A lot of it's basically what they call expense coverage. So all it will give you is basically funds to have manpower basically deliver notification to, say, the LDB or any other clients that you've had an issue with your product in the recall, and just the cost to destroy it. So all the revenue that you lost by that being that product having destroyed is typically not built in and not covered under this side of things. So with our program, we've built kind of an ancillary coverage in there where it will give you some coverage in the event of the actual lost revenue for dumping it or destroying of it. So, it's not all one and the same. So having a broker who kind of understands the ins and outs of that is really going to be important when you kind of go through that. The next one's probably not going to be a big issue for you as startups, but as you grow bigger, manufacturers E&O will be something that will potentially become important. And where that's going to come into play is if you're manufacturing for somebody else. So somebody comes to you, maybe they're short on capacity or just simply need a hand, and they provide you a recipe and they want you to brew for them. If you're off on the spec or the recipe in any way, and all of a sudden now you've got a whole bunch of product you're going to can or bottle for them, and it's not to the standard that they like, that's where we can run ourselves into a bit of coverage there. And they call that manufacturer's E&O. So not something that's going to be, like I said, right at the forefront for you now, but as you grow, it could be a very likely possibility. Last one, and again, a whole laundry list, so I could have went on all day with this, but this is another kind of interesting one that we've built in, is key employee replacement. So where that will really come into play is probably your brewer. And as morbid as it sounds, if they either pass away or have some sort of large issue where they're completely disabled and can't continue to work, this coverage will actually step in and help you with funds in your search for a new brewer. So, I mean, this day and age, in finding a very good qualified brewer is probably a little bit tougher. So you're obviously going to spend some money in recruitment, maybe travel back and forth if they're out east, for example, to try to coax them over. So that's where that coverage will provide a little bit of restitution, I guess, in that sense. Any questions? Nobody's left yet, so that's good. So other considerations, just in general, just based on some questions that I get pretty common. So build out and what we call Corsa construction. So the first day you put a nail in the wall when you start working on, on your space, there is coverage that you need to put in place on there, and it is specially to a build out phase. So it's not something that you just buy like a very plain Jane policy. It's very specific. So that's something that you would need to deal with, come day one of construction. Off-premises storage. So I get this one a lot. I don't think Mike's in the room from Direct Tap, but a lot of people come to me and say, oh, Direct Tap's storing our product, they're insuring it for us. That's not how that works. So they will cover it in the event of their negligence. So guy puts 4 pallets on a forklift, he tips the thing over and all the beer is gone. They'll step up to the plate in those cases. If they haven't done anything negligent, so they've locked the place up for the night and somebody literally breaks in and your product happens to be right at the front of the door and all your stuff is the first to go, that stuff is likely not going to be them stepping up to the plate to reimburse you. So in our policy, we give some off-premises coverage automatically built in, so you don't have to tell us that you've got stuff there. But it's a common question I ask just to make sure the coverage is enough, because if you get to say, $100,000 worth of product there for whatever reason, you're going to want to make sure it's insured on your policy while it's sitting at Direct Tap. I use as an example, but it could be any warehouse for that matter. Okay. Contract review and certificate requests. So that kind of goes back to your question about the festivals that you had. So anytime you are looking to enter into a contract, so it can be a lease for a photocopier, right up to the lease for your space, anything of that matter where you're basically putting pen to paper and has a contractual obligation in, we want to look at it. So we want to see it so we can go through the insurance specs of it and do 2 things. 1, make sure your policy is in compliance with it. And 2, if there's anything over the top and egregious about it, to give you a bit of feedback to say, hey, this is something we don't normally see. You might want to push back on this and maybe get your legal counsel involved to say this isn't quite the way it should be. We usually get to see these once the pen's been put to paper. And by then it's usually too late, because your chances of going back and trying to change all of that is going to be pretty slim to none. So being out ahead of that is great. It will help you in the long run. It makes my life a little bit easier as well too. And then when we get those, we typically turn them around within the day. So if you come to us and need a certificate for a festival, for example, and we usually get those like 2 days before, we'll get them to you, pretty Johnny on the spot. So that should be the standard when you're dealing with a broker. I mean, if they're not turning around a certificate, certainly within a few hours, but definitely within the day, I'd be asking some questions on the service level side of things. So next one, you're probably not going to have this issue for a little while, but when you start acquiring vehicles in their business name, there are some kind of specialty coverages within ICBC that you can look at where you can put it on a fleet type policy. and it does a few things. One, makes it a little bit more free flowing for you, so you're not having to be paranoid about who's driving what. And it also saves you money. The discounts in the fleet world are a lot more than what they are for individual insured vehicles. So, as you grow out, good things to consider. Excise bonds. So you will have to do that at some point along the way. We will handle them in office ourselves. They're pretty economical. We're usually talking like a few $100 at a time. But that's something you'll have to do to Excise Canada at some point, and that's where we can step in and help you out. And then last one, I don't deal with personally, but we have people within our office that do. But especially when there's multiple partners involved, and you've got some sort of a shareholder agreement set up, key man insurance becomes very important for a number of reasons, but more so if one of your partners were to pass away, you want to have funds flowing into the business that can buy out that individual partner's shares. So if they've got family they've left behind or anything of that matter, you don't want to string that out too long. So that's a service we have in-house that will help you out with, and something certainly good to consider as you start. So that's kind of it. I tried to pare it down a little bit. There's a lot of other stuff, certainly that we can offer within there too. So I'll open it up to kind of the floor if there's any questions.
Sure.
With all these sort of different things that could go wrong,
Sure.
levels of loss are really more than others. Is there maybe like a flat rate deductible on your claims, or is there specific deductibles for certain types?
Yeah. So typically any type of like general. Oh, sorry. So the question was, is there any kind of standard deductibles across the board? So in most of those property type claims. So if you had a claim where, say, your equipment or tenants improvements or anything like that were damaged, or even those things along the lines of the infestation, contamination stuff, the deductible is typically $1,000. That's kind of the baseline number. You can go higher than that and it will save you a little bit on premium, but that's $1,000 is usually kind of your starting point on that stuff. Okay. I thought I saw one hand maybe.
Yeah, I was curious about the excise bond. Is that when you get to a certain size that
Yeah.
is going to demand that?
Correct.
Do you have any idea what size that is?
Like the type of bond that they want. So it depends.
Just the size of the brewery where that may become an issue?
Yeah, I don't know quite off the top of my head. So the question was about excise bond and when it becomes applicable. There's a couple factors. It's revenue size, but it's also if you're storing off site or not. So that also comes into play. So I don't have those numbers right in front of me. Sadly, people will get the letter from CRA and then they'll come over to us right away. But yes, there's a multi-layered kind of factor in there. So I don't have a clear answer for you, but typically we'll look at them. We'll do like a $10,000 excise bond and it'll be like a couple $100, $250. So they're not crazy, but it's something you do have to put up to Excise Canada. Anything else? You guys are way too nice. Figured I was gonna get a couple tough questions, but sorry, go ahead.
Are there any limitations on the bad batch or batch loss? Like, I don't know if there's anyone from Daggerad in here, but they had an issue with their bottle conditioning room a couple years ago and had to destroy a few batches of beer that were bottled, and their insurance did not cover it at the time.
Yeah.
Would this type of insurance?
Yeah, so it's basically any type of, and I don't have the wording right in front of me, but I can get you the word for word on it. But basically, if it's any type of foreign substance that gets into the product that's not supposed to be there, that's essentially what happens. I mean, Adam from Northbridge can maybe chime in on that. I'll put you on the spot, but that, in the case of if it's some sort of foreign element in there that basically turns a product off from where it should be from a spec perspective, that's where that coverage will step in and help out. So again, though, it's very specific. So not every majority of policies I see don't have it. So I'm not terribly surprised that they might have had an issue with that, because I don't think I've come across a policy yet actually that has had it. There's some other carriers out there that will offer it, but it's not you got to specifically be looking for it. So if you're dealing with particular broker who doesn't know, chances are you're probably not going to get it. So, yeah.
And that was before contaminants.
Yeah, sorry, that was questions around the foreign contaminants. Yeah.
With respect to that batch insurance, does that cover your retail of that beer or just your cask?
Yeah, so we're actually working through a bit of that right now. So as long as we end up valuing it at the sale value, my understanding is that that's where we're gonna go. So obviously we're working out kinks with the program as we go along. So yeah, so it's really dependent. You can make a choice, right? So some clients decide that they don't want the retail value on the stock, and we're getting into maybe a little bit of a complicated territory, but you can basically backfill lost revenue through the business interruption side. It just becomes a lot more cumbersome for the client because then you've got to start digging out a whole bunch of financial information in the event of a claim. So most breweries say, I'd rather just put I know what my sale value is on all my tanks being full and all the product I have sitting on the floor. So I'll just put that on my policy. And if something happens and I lost all of it, the numbers there in the forefront. We're not spending, weeks having my controller or my bookkeeper trying to dig out financial margin information in that case. So long-winded answer to your question, but it's a choice of the clients basically. So, but yes, we can. Yep.
At what stage in the startup process do you have these sort of products in place?
So he was asking at what stage you should basically look to place insurance of any facet. So typically the first one we see is when you do your LDB application, they will ask for insurance. It's quite funny because they don't ask for any particular limit or any particular conditions in there. They just basically say, send us your insurance certificate. So we take that as at bare minimum having the general liability in place. So we usually start out at a 2 million general liability and we go pretty bare bones with them, and that just gets you through that application process because you aren't making any money at that point. You're simply just, spending out of contingencies. And then, we can put numbers together once you have kind of a budget with respect to your build out side of things and give you a rough idea of what the costing would be to ensure the improvements in the equipment that you're putting in throughout the build. And then when you're done, we just roll it into kind of your general annual policy with all the kind of the elements that are listed in the presentation there. So, yes.
This is just a general insurance broker question. But
Sure.
This experience where we were with another broker and we wanted to get a quote from a new one, and the new broker could not get underwriters to quote on our business because they only quote to somebody else.
Yes.
Is that an industry norm?
Yes.
And how do you get around it?
Yeah. So the question was I had a quote from one particular broker. I went to another broker and they said they couldn't quote me at all. So our industry works in a first come, first serve type basis. So if you work with a particular broker and they go out to the marketplace and get 5, 6, 7, 8 quotes for you, if you go to another broker after the fact because you didn't like the pricing or the coverages or maybe their attitude for that matter, and look to get quotes from that second broker, if they approach those same 7 or 8 insurance companies again, they won't be able to quote that other broker. So that's just kind of a general insurance rule of thumb. I'm looking at Adam over here because he might have some more insight on why that became to be the case, but it's something that's just always been that way from my understanding. And I think it's just about, insurance company and broker transparency so you don't have other people stepping all over their toes and say getting one quote from one broker and then another quote from another broker from the same company and then being completely different pricing wise and then having a bit of an issue to deal with. I get where you're coming from. It's not, it's frustrating from my perspective too, because sometimes a client will go out and get a quote or a number of quotes and not understand what they're doing. And then they'll come to us after looking for something like this. And then while the coverages we've built in are proprietary to us, only we can give them to you, the insurance company, Northbridge for that matter, in this case, is not proprietary to me. So if another broker goes to Northbridge, I'm not able to get a quote from them unless we go through some other background paperwork. So, it is a little bit complicated. I get where you're coming from. But the moral of the story in there is really interview your broker well. Don't worry about the quoting and the numbers and that stuff. For me, will come. I mean, I think if you feel comfortable with the broker and they know exactly what they're doing and have a good understanding of your business, I mean, you will get good terms, is the way I've seen it. Going to 2 or 3 different brokers and getting a whole bunch of different quotes will never do you justice. It's not something I advise. I mean, if you really feel like you need to, then sure, but I wouldn't suggest it. Pick one and go with them or her.
So it's more about the package that your broker gives you versus the cost. Is that to ask the question then, is that what Brewery's offering through the guild, that you've got a more tailored, specific to breweries package that you're growing?
Yeah, so I guess that's a shameless plug of why we're here. When we approached the guild, we put together a very kind of specific package and presented that to the guild and the details of it. And it was something that your peers actually chose. So there was, I think, 3 other brokers a part of the process and all put together packages and details of what they wanted to do, insurance product related, but otherwise. And we were the ones that kind of floated to the top. So, obviously what we've put together has been recognized as something that's, premium from a coverage perspective. I understand pricing is a big piece of the equation as well. I mean, you need to keep your costs in line. I don't like to harp on price, but certainly so far I haven't run into a situation where we've been completely out of whack on a pricing perspective. We've been extremely competitive. I haven't seen and in relation to what we're offering as part of that, it's been top of class so far from the feedback I've gotten. Any other questions? All right. Class adjourned. Thanks. We're out here. We're doing a little beer pong contest for a Sonos speaker. So come say hello. Work on your skills. I'm here the rest of today. I'll be at the party later on tonight. So feel free to come say hello. To kind of give clients a little bit of understanding about what we do as brokers, because as the question came from the floor, there's a lot of interesting intricacies of insurance, certainly on the broker side of things, that the general public probably doesn't quite understand. So, for us, we try to look at it from, in this case, it's a 9-pronged approach, but really going through that whole kind of first understanding your needs, kind of asking all the questions about, where you have concerns, where we can kind of backstop that with actual insurance products, but also what we can do with just simple risk management advice. So whether we bring in other resources from outside of insurance and give them that resource. And then from there, we constantly want to be in touch with you. So some clients literally like to talk to us once a month. I have a few, as crazy as that sounds. And then some are good, they want to do their midterm review with us, and then we'll come see them on renewal, and that will be the extent of it. And I do have some that are like, don't show up here until a few weeks before the renewal. Send me an email of what you need. So the comfort level and how much you engage your broker is really driven by the client. And if you feel like you're being neglected, I would certainly bring that up and have a good understanding of kind of why you're not getting the attention that you deserve. So these are kind of some of the reasons why we kind of see people move, and certainly come to us who have an existing relationship in there. So there's a myriad of reasons. I would certainly say we get a lot of questions because of number one, price is a component of it, but certainly you get what you pay for. So, we may not always be the cheapest in our perspective, but we will, from a service side of things, I'll put my name beside it all day. That will be the best you've got. Like between myself, I have a dedicated assistant. We are Very diligent. I am on my phone a lot more than I probably should ever be, to the point where my wife slaps me outside the head quite often. So I'm checked on a lot. So, you know, again, I may not respond every night. It's Saturday at 9 p.m., but you definitely aren't going to be left hanging for a week while you're trying to get things done. So I'm available. You get my cell phone. It's very, I'm very connected to my clients. Yeah. So, I mean, a lot of these in here are, you know, how we see the process go. We get a whole bunch of copy and quotes, and then you pit a bunch of brokers against each other. Again, I honestly don't feel that's the best way you're going to get the best for your business. If you have two people you're thinking or you want to have as your broker, interview them. Go ask them for a coffee, ask them questions that you think are important, explain what your business is about. And if they have a good understanding, you feel like they have a good finger on the pulse with respect to breweries, or if you did any other business for that matter, I think you let them do the job. You know, in our case, we have, maybe you can help me here, Scott, but maybe 30 or so breweries.
Yeah, I think we have 32 right now.
32 breweries. So asking that kind of question, asking for references. So if you want references, I can get, I've got a number of clients here on the floor. I will give you names of companies that I deal with, and they would be happy to give a reference and give you a little bit of sample of how we like to operate and what we're all about. So don't be afraid to ask those questions for sure. So it's a very complicated web. I like it. When you go to different brokers, the way they'll take the information and put it into an insurance company will be extremely different from one to the other. Mandeep, who's sitting in the middle there, is actually the underwriter for the program. So he was talking to me yesterday, and he actually received a piece of business from two different we were talking about it anyways, but same piece of business, two different brokers, completely different information in both of them. So he's looking at them, and it's like two completely different businesses, but it was exactly the same thing. And one was, I would say, relatively accurate from what I understood, and the other one was not accurate whatsoever. So again, going back to kind of that interview process with your broker, and do they understand? If I feel like maybe I'm missing something through the conversation, I will take what I'm going to send in to these guys and show the client and say, this is what I'm going to say about your business. Does this look right to you? And get that confirmation from you, because I don't want to always put words in your mouth and then back you into a corner with the insurance company from, you know, a pricing perspective or whatever that it's hard to dig yourself out of after. So, you know, these are the kind of messes that we see in the event where somebody feels the need to bring in 3-4 brokers into the mix. It's just not a wise way to go based on my suggestion. So
yeah, just before you change slides, Matt, I go back to this one.
Yeah.
This really addresses your question. So what happens if you go to one or two brokers, you might find the first broker, maybe your incumbent broker, has going to the very best market, which we believe is Northbridge. And they might tie that broker up, and no one else can get to that market. They have got that deal lined up. Broker B might be okay, and they will give an average submission better than the first one, but can't access that market, that carrier, that insurance company. And then you got likely the best broker, C, they have the best submission, understand your business, the best information, so they can target the best price and the best coverage, but they don't have access to those best markets. So what Matt is saying, and I think it'll be on one of the next slides, interview your broker and just go with one broker to go to the market. Yeah, so this is best in class versus a poor performer. If you're a best in class risk as a company, you should get best in class terms, price, understand the relationship with the long-term solution coverage. And then if we go to the next slide, this is really what we believe we show. That's the product and price, and that's really what most companies see in terms of their coverage and the relationship. And below is what Matt provides, the value-added service and the long-term risk reduction, right? So Matt, I'll just let you finish off, because this will show the different way that you can look at choosing your broker and choosing your insurance program.
So I think echoing the comments probably third time over now, but go do your due diligence, especially if you're early on, like you haven't started yet. Take a few days, and there's a few brokers out there that are advertising that they're the brewery kind of brokers. If those are the 2 or 3 and you want to interview them, I'm happy to do that with you. And then from there, make your decision and let them roll with it. I truthfully think, unless they do something really belligerent and drop the ball for whatever reason throughout, later on, stick with who you like, let them do their work, and you'll get the best results from your perspective. I think we're probably good because I think we're creeping in on time here too. So good. Any other questions? Now I'll let you free. Sorry. Phased you out. Thank you.